How can you ensure that you are provided for in old age? In some countries, this is why people have many children and grandchildren. But what if you no longer live with your family and it is no longer possible to provide for many children?
Welcome to YD. Why do Germans do things the way they do?
Farmers are still familiar with their retirement home. For centuries, farmers have built a small house on their farm and then bequeath the farm to the child, but retain the right to their old man's portion, for example, the small house and a regular share of the farm's income. However, while in ancient times most Germanic peasants were farmers, over the course of time there were fewer and fewer of them. In the Middle Ages, agriculture became increasingly profitable and fewer farmers were able to provide for more people. If you were a master craftsman or merchant, you could bequeath or lease your business and live off the rent. And if you belonged to a guild, it also looked after the elderly. The miners' guilds also looked after each other. But we are now in the 19th century and industrialization has lured many rural workers to the cities, the mines and the factories. The workers often only earned enough to live on and could hardly put anything aside. It was even worse if you became an invalid quite early on. As in the two videos on health insurance and accident insurance, we again talk about Bismarck's effort to stop the influx of workers into the trade unions. Years earlier, Kaiser Wilhelm I had written that he wanted insurance against illness, disability, and old age. Now, it was about the third insurance, pension scheme. The law came into force on 22nd June 1889, 1 year after the death of Kaiser Wilhelm I. Now his grandson Wilhelm II was Emperor of the German Empire. 31 Landesversicherungsanstalten, state insurance institutions, LVA, are founded, which are managed equally by employers and employees. With 60,000 insured persons, the LVA Oldenburg is the smallest institution. With over 1 million insured persons, the LVA Silesia is the largest. There are 13 LVAs in the Kingdom of Prussia alone. All workers and small employees, Angestellte, with an income of less than 2,000 marks per year are compulsory insured from the age of 16. The contribution amounts of 2% of income to be paid in equal parts by the employee and the employer. However, there's also a state subsidy. Ultimately, the employer, employee, and state each pay a third. The state contribution was seen as a compulsory state task for the care of the poor. The retirement age is very high, even by today's standard, at 70. Anyone who has paid in for 30 years is entitled to a pension. If you earned around 600 marks a year, you were entitled to a pension of 162 marks from the pension fund. However, the old age pension was not the main task, as it was much more important to provide for invalids, for those who could no longer work due to accident or illness. Invalids received an additional 60 marks a year. Medical treatment was also an important task of the insurance companies right from the start. Those who were ill were expected to make a full recovery and be able to return to work. Even the method of payment in and out was deliberately chosen. Bismarck did not want savers' money to be lost in a bank or company went bust. A transitional provision made it possible for the first old age pensions to be paid out as early as 1891 for over 125,000 old age pensions. Anyone over the age of 70 who had worked for 3 years before the law was introduced received a pension. In the early years, the LVA collected so much that it was even possible to build workers' housing estates to ease the housing situation in the slums. Due to the poor hygienic conditions there were repeated outbreaks of diseases such as tuberculosis. New sanatoriums were built by the LVA for the cures, where the insured could regenerate. Also, the LVAs were not intended to make a profit, they were supposed to generate reserves for several years, which led to full coffers before the First World War. In 1911, the Reich Insurance Code was passed. This regulated which benefits were paid by health insurance, accident insurance, and pension insurance. A cure after an accident at work was paid for by the Berufsgenossenschaft, and a cure after an illness or private accident was paid for by the pension insurance. The regulations in place at the time remained fundamentally valid until the 1990s. In 1913, an insurance law for white-collar workers came into force, and until 2005, there were differences in the pension insurance schemes for blue-collar and white-collar workers. White-collar workers were allowed to retire from the age at 65, and considering that work at a desk as a white-collar worker was far less dangerous than working in a mine or factory as a laborer, white-collar workers had a better chance of reaching retirement age. The First World War put an end to the full coffers. Some LVAs lost a large part of their assets through war bonds. A small improvement for workers was the equalization of the retirement age to 65. But only the introduction of the Reichsmark was able to stabilize the system, which had been battered by war and inflation to some extent. In 1923, the individual insurance companies of the minor associations were merged into the Reichsknappschaft. Under the National Socialist, self-administration was abolished and the insurance companies had to buy Reich bonds. After the Second World War, the coffers were empty again, the economy was in ruins, and numerous pensioners had to be provided for. The pensions of current pensioners were reimbursed from the income of current employers. What was a necessity and a good tradition at the time predictably became more and more of a problem over time. Society is getting older and older, so more people are reaching retirement age and receiving pension for longer and longer. This means that fewer employees have to pay for more pensioners. While the contribution rate was initially 2%, it is currently 18.6%. But just like back then, the current system has an advantage. During the financial crisis, large assets disappeared and some pension funds lost a lot of value. In Germany, this has hardly any impact on pensioners and no impact on statutory pensions. Nevertheless, politicians have been working for years to find a solution to keep pension levels stable and contributions stable. In 2007, the standard retirement age was gradually raised to 67 in a Rentenversicherungsaltersgrenzenanpassungsgesetz, Pension Insurance Age Limit Adjustment Act. The last government wanted to implement some changes. In autumn 2024, the second pension pact was passed by the Bundestag, in which the pension level was to be fixed at 48% until 2039, while the contribution was to be gradually increased to 20%. The generation capital was a brand new investment by the federal government of 12 billion euros in shares, which was to be used for future financing. In Norway, for example, there is a state fund for pensions that generates very good profits. Also, it was actually agreed in the coalition. It was once again the FDPs that violated agreements once they had been made and subsequently worked towards breaking the coalition. As a result, it was no longer elected in the Bundestag in the subsequent new elections. Federal Labor Minister Norbert Blüm said pensions are safe. Die Renten sind sicher. Volker Pispers also said in his program, there's always something to distribute. If a lot of people earn a lot, there is a lot to distribute. When few people earn little, there is little to distribute, but there's always something to distribute. Another form of solidarity. In October 2005, the pension insurers created a standardized brand, the Deutsche Rentenversicherung. At that time, there were 14 Landesversicherungsanstalten for workers, Bundesversicherungsanstalt für Angestellte, BFA, which was then called Deutsche Rentenversicherung Bund, and the Deutsche Rentenversicherung Knappschaft Bahnsee, which united the statutory insurances of minor pension funds, the Maritime Fund, and the Deutsche Bahn. Whereas about 1900 the majority of the working population were laborers with hourly wages, today most people work as salaried employees. As a result, the BFA or DRV Bund had many more insured persons than any LVA. In addition to the statutory pension insurance for all employees subject to social security contributions, there are state-subsidized supplementary insurance schemes such as company pension schemes, betriebliche Altersvorsorge. Here you can invest part of your salary in a private life insurance policy with a subsidy from the employer, which means that you do not have to pay income tax or social insurance on that invested portion. However, you will have to do this when you draw your pension in old age. It is likely that the financing of statutory pensions will need some form of adjustment to population trends in the future. But time and again, politicians shy away from tackling this because far-reaching changes are needed. And when they do take the step, they suddenly shy away from their own courage, like the FDP in 2024. How do you finance retirement in your country? Remarks, addition, and comments in the comments. Thank you for your attention. See you in the next video.